Good morning, Doctor and my fellow friends. Today, our Group 6 will present about Group Assignment 2, which is BPPLC versus Chevron Corporation.
Assalamualaikum Doctor. Firstly, I will introduce myself. My name is Dalila Sumaina binti Muhammad Arshad and matric number 301134. Today, I will present about the company profile for BPPLC and Chevron Corporation. Firstly, for BPPLC is originated in the United Kingdom. The was renamed the Anglo-Persian Oil Company and then renamed as British Petroleum. This company is known as the oil and gas industry sector, whose founder is named William. In addition, BPPLC is also a British multinational oil and gas supermajor engaged in all segments of this energy sector, from upstream exploration to downstream marketing. It produces about 2.4 million barrels of oil equivalent per day and operates in 16 countries. On the other hand, main product and service for this company is focused on oil and gas exploration, production, refining, and marketing. Main product include crude oil, natural gas, and LNG. The company also targets the sale of its product worldwide, such as Germany and the United States with several service stations. Further, growth is focused on increasing demand, trade efficiency, and the transition to renewable energy such as hydrogen and wind. Besides that, for Chevron Company profile known as an American multinational energy corporation that is active in trade in more than 118 countries in the world. This company produces oil and gas. Chevron Corporation, one of the largest companies in this world, and also known as the second largest oil company in the United States. On the other hand, Chevron Corporation focuses more on exploration, production, transportation, and marketing. Not only that, it also ventures into the field of investing in chemicals and continues to generate power. The main product and service for the Chevron Company are gasoline, diesel, jet fuel, and base oil. Last but not least, Chevron Corporation also generates income through the sale of crude oil, natural gas, and refined product.
In this section, we compare the capital structure of BP plc and Chevron Corporation from 2021 to 2024. We focus on 4 key indicators, which are debt to equity ratio, leverage, retained earnings, and sources of financing, to understand how each company finances its operation and manage financial risk. This slide compares the capital structure of BP plc and Chevron Corporation. BP shows a high debt to equity ratio, reaching 2.6 in 2024, which means it relies heavily on debt financing. Its leverage is also high and retained earnings have been declining, indicating weaker internal financing capacity. As a result, BP faced a higher financial risk. In contrast, Chevron maintained a low debt to equity ratio of 0.68, showing a conservative approach to financing. Chevron also has a strong and increasing retained earning, allowing it to fund investment internally with limited debt. In conclusion, BP adopts an aggressive capital structure with higher risk, while Chevron follows a conservative and more stable financing strategy.
My name is Salsana binti Rosli, matrix number 301126. I will continue with impact on global economic factors. There are 3 major things in this factor. For the first one is interest rate changes. There is directly increased borrowing costs for capital-intensive projects. It leads to a strategic shift, reliance on internal cash flows over debt during high-rate periods. This influences project selection, favoring those with strong, immediate returns to cover higher financing costs. The second one is currency fluctuations. So the impact reported profits and cash flows due to global operations create translation risk, which is weaker foreign currency, reduced USD earnings, and transaction risk. This influences financing decisions, pushing companies towards USD debt or hedging to manage exposure. So the third one is global market volatility. Oil price swings and economic cycles directly dictate cash flow and profitability. During downturns, investor risk aversion increases cost of capital and restricts market access. Geopolitical and policy uncertainty further disrupts earning forecasts and financing plans, leading to more conservative balance sheet strategies. So to conclude, BP and Chevron's financial strategies are highly sensitive to global economic conditions, forcing continuous adaptation in capital structure, project funding, and risk management. So that's all from me. I will pass to the next presenter.
And my name is Chong Mun Chun with matrix number 299643, and now I will explain about the 4.0 financial risk and risk management strategies. So, due to their global operations, both companies are actually exposed to 4 major financial risks. For the first is currency risk. BP plc is exposed mainly to British pound fluctuation because many of its operating costs and dividend payments are UK based, while Chevron also faces currency risk, but to a lesser extent because most of its operations are denominated in US dollar. For the second is interest rate risk. BP plc is more sensitive to interest rate changes because it holds a high level of floating rate debt. In contrast, Chevron also faces interest rate risk, but mainly through its fixed rate debt and investment portfolio. For a third is liquidity risk. Both companies are operate in capital-intensive industry and they require large cash outflows to fund their operations, investment, and dividends. For last is credit risk. It arises from trade receivable and financial counterparties in both companies. Next, I will present about the quantity analysis of those financial risks. So in terms of currency risk, we can see BP plc has reported US dollar 555 million of foreign currency borrowings that were not swept into US dollars, as well as US dollar 92 million in GBP denominator capital expenditure contracts. While in comparison, Chevron only recorded a foreign exchange loss of US dollar 282 million, mainly due to the strengthening of the US dollar against major currency such as Mexican peso and euro. And for interest rate risk, BP plc has disclosed that a 1% increase in interest rate would raise its annual finance cost by approximately US dollar 180 million. Meanwhile, Chevron Corporation reported gross derivative liabilities of US dollar 1.9 billion, indicating the exposure of interest rate movement affecting debt and investments. Regarding liquidity risk, BP plc has US dollar 53.7 billion in trade and other payables and an additional US dollar 4.4 billion of debt maturing within 1 year, which requires a very strong short-term liquidity. Chevron Corporation also requires significant liquidity to manage its US dollar 1.9 billion derivative obligation. And lastly, for credit risk, BP plc has reported trade receivables of US dollar 17.8 billion with expected credit loss allowance of US dollar 995 millions. While Chevron Corporation has recorded US dollar 17.7 billion in receivables due within 1 year. And lastly, I will explain that how this company act to manage this financial risk, while BP and Chevron Corporation actually adopt different strategies. So for BP plc, it relies heavily on financing hedging, which use foreign exchange forward contracts and currency swaps to manage currency exposure. It also adjusts its capital structure by issuing foreign currency debt to hedge overseas investment. Chevron, on the other hand, adopts a more conservative approach. It uses hedging selectively and relies strongly on stable operating cash flow and a low debt capital structure to absorb financial shocks. So in a short conclusion, we can see that BP plc manages higher financial risk through active hedging and capital structure adjustment, while Chevron Corporation reduces risk mainly through conservative financing and strong liquidity, while making it financially more stable overall compared to BP plc. That's all for my part. Thank you.
Next, this slide discusses governance and financial decision in BP plc and Chevron Corporation. Before that, let me introduce myself. My name is Putri Bagisanani binti Muhammad with metric number 301072. For corporate governance, both BP plc and Chevron Corporation have board of directors made up of executive and independent director. BP separate the role of chairman and CEO, while Chevron combine both roles. However, both companies rely on independent board committees to ensure accountability and strong governance. Board of directors play a key role in setting strategy, approving long-term goals, and monetary management to protect shareholder interests. Major financial decisions are approved by the board, while the CEO and the CFO handle daily financial operation. In terms of shareholder right, BP plc provide equal voting right and allow shareholder to vote on important matters such as director appointment and major corporate action. Chevron also allows shareholder to vote on board election and executive compensation, and it emphasizes high standard of financial disclosure. Regarding accounting standard, BP plc follow International Financial Reporting Standard (IFRS), while Chevron follow US GAAP. Both companies publish audited financial statement, ensuring transparency and reliability of investor. So, in conclusion, BP plc operate with a higher level of debt with a debt to equity ratio of 2.6 in 2024. Rising interest rate increased BP finance costs while retained earnings have declined. Therefore, BP should reduce its debt review dividend payment, and strengthen management of currency and green energy funding risk. In contrast, Chevron Corporation has conservative and stable capital structure, with debt making up less than 45% of assets. The company holds very strong retained earnings, which could be better used to invest in a clean energy project. Overall, BP needs to focus on improving financial stability, while Chevron should optimize growth while effectively managing its risk.